We are very optimistic about Bitcoin in particular. And I think the big surprise to us, we had been expecting more institutional or professional interest, meaning institutions starting to put it in their funds, and to see Mass Mutual put $100 million of Bitcoin into the general account. Do you know how many hoops that an insurance company would have to jump through to be able to do that? Now, it's only 0.001% of a general account. However, just to get it in there, unbelievable. What has surprised us is the diversification that companies like Square, Tesla, and MicroStrategy, the diversification into Bitcoin on their balance sheets. They are starting to build their cash positions. Can you believe 2 years ago, people thought Tesla was going to run out of cash? Now it's built its cash positions to such an extent that it's diversifying about 8% into Bitcoin. I think it's a great insurance policy. It makes a lot of sense. And it's not, meaning if we go into an inflationary period, cash will lose its purchasing power. Bitcoin will not. In fact, Bitcoin, as you can see recently, is gaining purchasing power pretty dramatically. It's what's called a deflationary currency. All that means is your purchasing power goes up over time. And so I think more innovative, tech-savvy management teams are saying, why don't we diversify? What's the reason not to diversify? And so I think this is going to happen more broadly. That's a very big deal. So Tesla put 8% of its cash, I think Square's up to 5%, MicroStrategy, all of its cash. And if all the corporations in the United States were to do that, somewhere in the 5 to, well, let's just say the 1 to 10% range, just diversifying into Bitcoin, that would add anywhere from $40,000 to $400,000 to the Bitcoin price. So it would double the Bitcoin price at a minimum. If it were only 1% diversification, it would push the price up almost. Well, Roku, everyone asks, okay, there's a huge transition from linear TV to streaming TV. And what would you invest in, or where would you invest given the $70 billion of linear TV advertising dollars that are going to disappear and go somewhere? Where would you invest? Most people would say Facebook, Google. We would say a lot of people know that. That is no surprise. The surprise is Roku. Roku is becoming the operating system of streaming TV, of connected TVs. It and Amazon are in competition, so to speak. But Roku put its own channel. It has started its own channel and is starting to buy content for it. Quibi is one example. It has just moved on to Amazon's platform as well. So we think those two, certainly in the United States, are going to take the lion's share of the connected TV market. And Roku is moving internationally and is finding really good success. And I think that's an upside that many people don't anticipate. Mind-blowing. Most stay-at-home beneficiaries, the stocks, they peaked in the summer last year. Zoom was cut in half from $600 to nearly $300 last week. Got the earnings report this week. And most people have been saying, okay, yeah, we're kind of getting back to normal. They got to slow down. Its growth rate accelerated from 365% year-over-year growth to 369% year-over-year growth, a $900 million run rate, which is $3.6 billion annualized. That's what people's estimates are for 2021. They're wrong. It's going to be much higher than that. The world has changed. And I think Zoom is it's playing in the largest part of the technology stack out there, the $1.5 trillion telecommunications part of the stack. And I think it's going to usurp a lot of the old telco infrastructure. So I don't think people understand that. So we're pretty excited about it, and actually like that the sentiment right now is so negative. People think this stock at about $110 billion is selling at an outrageous multiple to sales. It is not if our estimate for this year is right. In fact, it's probably undervalued. I know people think that's outrageous, but stay tuned. But we do think sports betting is losing its taint. DraftKings is becoming a platform for sports betting. States in crisis with huge deficits are going to capitulate one after another. And then one of the most mature betting states, New Jersey, DraftKings reported last week, its revenues were up 100%. Again, this was another stay-at-home beneficiary, so people said, we're going to get back to life as usual. This is going to be part of life as usual, and so New Jersey was very telling to us, and we do believe that it is a platform strategy in the space.